Welcome to another video with Invest with the Doctor. My name is Dr. Haider. During the day, I am an accident and emergency doctor, and during the night, I'm a trader and investor. In this video, I'm going to be talking about two stocks. One is Iris Energy, and the second one is nphase, which is a solar stock. Now, there's quite a bit that's been happening in the financial world and the stock market itself. And my aim is to bring those news articles and my view on them in the videos so that you can be a better investor and a better trader. And you can make your money work for you better. If you stay connected, which is the thumbnail for this video, you'll be on the right path to making a reasonable amount of money in a reasonable amount of time. So having said all of this, let's start with a few things that I think are important from a finance point of view. I think that the markets are about to be left without a steady drumbeat of earnings. Earnings are mostly over this week, and you should be expecting stocks to get more volatile from here as inflation and war continue. It's been another positive earnings season on the whole. More than 80% of companies in the S&P 500 have delivered upbeat earning surprises with an average growth rate of nearly 28%, the highest since 2021. And that has pushed the benchmark US index to a series of record closes driven by tech stocks. But clouds are gathering. The Federal Reserve appears to have little room to cut interest rates as surging energy prices drive up inflation. And I think that's happening in the US and here in UK. Let me show you one article. So this is from BBC News. And it says UK waters down new Russian oil sanctions as fuel prices rise. Now, it says plans to impose a ban on UK imports of diesel and jet fuel made from Russian oil in third countries have been watered down amid concerns over supplies and price rises. So if you've seen any of my previous articles, I've been talking about this time and again. This article also mentions that earlier this week, the US extended a similar waiver, first introduced in March, which loosens sanctions, preventing other countries buying Russian oil and petroleum already loaded on vessels at sea. So it's happening in UK, but it's also happening in US as well. And part of it is this. So they're connected. And this is that the cost of everything is going up. So if you look at this article, it says supermarkets hit back over pressure to cap price of milk, bread, and eggs. So everyday prices are going up. Government ministers are pressing supermarkets on cutting costs for shoppers, but will not force them to cap prices on essentials such as eggs, bread, and milk. Multiple supermarket sources told the BBC that the government had urged them to voluntarily freeze the prices of key groceries in return for an easing of regulations. So why is this happening? This is happening because of oil itself. And if you see here, this article later says it's right that the government looks across the board at what more we can do, both government levers, but also talking to industry about the steps that they can take to support people with cost of living. It's happening because of oil itself. Oil goes up, and virtually it's there in everything. And because it's in everything, the price of everything goes up. And so you can see that even basic things like milk, bread, eggs, etc. are going up, and they're going up quite fast. So I think the cost of living, if crisis, if that's what you would like to call it, is going to get a lot worse. Now, this brings me to something that I think is important to understand, and I think many of the people who are watching this channel would agree with this. And please do comment in the comments box what you think of this. I think a lot of earners are experiencing what's often called the Henry phenomena. High earners, not rich yet. So this is the phenomena itself. So high earners, not rich yet. People can make very good money on paper, yet still feel financially stressed because their lifestyle, debt obligations, housing costs, taxes, and expectations rise alongside their income. Lifestyle inflation is usually the biggest culprit. As income rises, spending quietly expands to better homes, cars, holidays, subscriptions, schools, dining, etc. The result is that cash flow still feels tight despite high salary. Many people are income rich but asset poor. They earn a lot, but most of it is consumed rather than converted into appreciating assets or investments. Comparison culture matters more than people realize. If your peers are also high earners, your normal becomes distorted. A 200K lifestyle can start feeling average when surrounded by others spending similarly. So I'm talking about 200K, which is quite a bit if you compare to the lifestyle here in the UK. So the financial stress is also psychological. Money anxiety often persists regardless of income because security is tied more to savings, flexibility, and autonomy than rather than raw earnings. Feeling rich becomes more from margin and control than from income itself, and that usually means lower fixed expenses, um, higher savings investment rates, less consumer debt, clearer priorities, and spending aligned with actual values rather than status signaling. One interesting point backed by a service is that even households earning 300K often still report living paycheck to paycheck or feeling financially insecure. So you have to look at these things. So you have to try to lower your expenses and the debt that you've got one way or another. For some entrepreneurial or ambitious, the trap is often income increases, their lifestyle upgrades immediately, fixed obligations rise, and freedom actually decreases. Whereas people who feel wealthy tend to prioritize optionality, time freedom, investment ownership, and low financial anxiety. So the path for a higher earner to genuinely wealthy is less about earning and more about a building gap. So what that actually means is that what comes in and what more, there must be a big difference in what is coming in and what is going out. Now this may look quite simple, okay, but in a way it actually isn't. So that's what you need to look at. So you need to cut um, your outgoings, and that is one way that you would only be able to that's one way that you'd be able to get some money to be able to invest and for those investments to grow. So I think a lot of people would feel that they are high earners, but they are still not rich yet. So that's the Henry phenomenon. I think for quite a few people in the UK, that might be the case. Now, looking at what's been happening lately, if you've noticed this, the US president or someone in his inner circle makes a positive comment, or one that can at least be interpreted positively about an end to the war in the Persian Gulf. That causes stocks to rally and bonds and crude oil futures to fall. That would indeed be good news. Those moves, however, fail to fully reverse when nothing concrete is reported. It's a ratchet effect that has been beneficial to stockholders. The ratchet effect that accompanies positive rhetoric about the situation in the Persian Gulf is that stocks and bonds rally, yields fall, and oil sinks whenever there is positive news about peace talks or a possible resolution to the war. Yet the after effects have differed since the end of March, when the talks lead nowhere, as they unfortunately have done multiple times. Yields and oil return to their now prevailing uptrends, but stocks suffer no lasting ill effects. So, I guess what I'm trying to say is basically stocks start falling. Somebody in the U.S. In the U.S. president's inner circle tweets about how the war is ending. It doesn't, but stocks start rallying, and when nothing is happening, and the war is not ending, the stocks drop, but they don't drop as much. However, oil just continues a steady climb as things don't get better. So it's a matter of balancing the oil. It's a seesaw basically. So oil on one side and the stock market on another. And I think more and more you get tweets where they say the war is ending. Suddenly you see a rise of the stocks. Then it's not really ending, and they drop a little bit, while oil continues a steady climb. Interestingly, Nvidia was not much of a catalyst in either direction. Although the company once again beat EPS and revenue expectations, raised guidance, and boosted its quarterly dividend, the stock has been pretty much in the same place. The stock price didn't change much at all. But that effect, I think, is likely to. The earnings the earnings season has come to an end, so that sort of leverage for the stock market might not be there, and that might be a bit of a problem in the coming few weeks. Now, having said all of this, I'm going to be talking about the two stocks that I think are going to do well in the coming few weeks and months. Like I said, one of them is Iris Energy, and the second one is nphase. So let's have a look at both the charts. So this is the chart for Iris Energy. The ticker for it is IREN. Iris Energy, IREN. At the time of making this video, the stock is about for $58 US. And it's rising, and the stock is rising from this sort of a falling edge pattern. So if you can see, the stock price touched this, and now it's going up. It's above the 21-day moving average. It is above the 50-day and the 50-day and the 200-day moving average, which is the red and the green. The RSI is rising. MACD is getting positive. My first price target for this stock is $71 US, and if it gets there, then the second price target for this stock would be $85. So again, this I would say is it's quite reasonable for it to get there in the coming few weeks and months. Now, you might be wondering, what does this stock do? What does IREN do? IREN is a stock that operates in the data center business in Australia and Canada, and the company owns and operates computing hardware as well as electrical infrastructure and data centers. They used to be and still do Bitcoin mining as well. So that, like I said, first price target, and if it gets there, this would be my second price target. If the stock price has not reached that price target yet, you can still get into the stock itself. So that's what I would say. So people say, oh, we have missed it. Well, you've not really missed the price itself, because if it's not reached that price yet, you can still get in. So like I said, at the time of making this video, it is 58 US dollars. And I think in the coming few weeks and months, it's entirely possible that the stock can rise to a price target of 70 US dollars. And if it reaches 70 US dollars, okay, I would then not be, and holds, then I would not be surprised if it reaches 85 US dollars. So this is ticker IREN, which is Iris Energy. The second stock that I wanted to talk about is the solar stock called nphase. So let me show you. This is the stock itself. And now nphase designs, develops, manufactures, and sells home energy solutions for the solar photovoltaic industry in the US and internationally. The ticker for nphase is ENPH, and the company name is nphase Energy itself. Now, before you invest in the stock, there's something important that I want to tell you. Now, as you can see, this stock has been very, very choppy, very choppy. But when it moves, it tends to move quite well. If this stock stays, so the current price at the time of making this video is 62 US dollars. If it stays for a couple of days or a few days at 62 or rises, then my price target for this stock would be 91 US dollars. But it has to stay above 62 US dollars from the current price. Okay, it has to stay at 62 for at least 2 to 3 days, or has to continue rising for it to reach 91 US dollars. And the reason I say that is because this stock tends to be a very choppy stock, as you can see. This is the daily chart itself, so it sort of rocks around quite a bit. But like I said, if it stays in this place, then it's quite likely that you can reach a price of 91 US dollars for this stock. Now, time and again, I talk about the stocks that I believe are doing well, or the ones that will continue to do well, and there is always a reason for revisiting former stock picks as an important part of the investment process itself. And this helps in evaluating what worked, what failed, and whether the original thesis remains intact. Markets constantly evolve, and reviewing prior ideas can uncover changes in momentum, leadership, valuation, and technical structure that may create either new opportunities or warning signs. So this is why I made this thumbnail, that if you stay connected, I think if you keep on watching the videos, you'll be on the right side of what's going on in the financial markets, and you will see steady rise in your profits. Okay, now it's not a guarantee. I don't have a crystal ball. I don't know what the future holds. I don't know what tomorrow holds, but I'm just giving you an idea of the kind of homework I'm doing. I'm showing you what I'm buying, what I'm holding, and why I think it's a good idea for me to continue doing what I'm doing. And I feel that you can benefit from this as well. So this is my whole thesis behind making these videos. I buy these things when I make the videos, and then I time and again and review the stocks to see what is happening. Has it reached that price, or has it not reached? These are usually good, stable companies that are going to make you money in the long term. When they do reach that price target, what you could do is either sell all of the stock, get your 20%, 30% profit that you got, and then invest it again in another stock that I'm going to talk about in my future videos. Or you could sell 2/3 of it, okay, whatever the amount is, and let 1/3 to run in the stock itself. So if it goes higher, you don't feel that you've missed profits. So, and that's what I normally do. So 2/3 I sell and 1/3 I let run, and that's turned out to be a good strategy for me in the long run. So again, for those who have invested and have looked at my previous videos, I'm just reviewing the stocks that I talked about, and this is going to be a quick review, and why you should stay invested in those stocks. And if you don't have a good position, you can still think about them. So in my last video, please go back to the last video. I think I mentioned this stock, and why it would do well, and my reasoning for that video, and you can go back and listen to it. I think you'll still find it beneficial, is the way the stock has been moving. So which one am I talking about? I'm talking about Global X Hydrogen. Okay, so the ticker for it is HYGG here in the UK. Global X Hydrogen. This is the stock itself. This is the daily chart. You can see it's following the trend line very well. So it touched the trend line here, and then touched the trend line here, then went up higher. And you can see that it's been going up constantly since then. So I think if it just keeps on bouncing from the trend line, it's upsloping. Okay, that means the price is likely to continue going up higher. So I think this is one stock that is a good one to get in. Another stock that I keep on talking about time and again is this one called AXTI, or it's AXT Incorporated. This is a semiconductor stock, and look, I think again this is why you should be watching my videos, and this is how I keep track of my investment itself. Look at the 21-day moving average, which is this blue line here. If you watch any of my videos, you have seen that I keep on talking about these three averages, which I find very, very, very useful. And all you have to do is just stay connected to the videos, and you'll be on the right track. Look at how the price has been bouncing. I don't know if you see it here. So the price has been tracking the 21-day moving average. So it came, bounced, remained up, bounced above the 21-day moving average, kept on going, went down a little bit, then bounced again, then bounced again, then bounced again. Okay, again here it dropped a little bit, then quickly came up. So that is telling me that there is a lot of momentum in this stock, because it keeps on bouncing around the 21-day moving average. Okay, so again bounced, went a little bit lower, then bounced again bounced here, and now it's going to the 21-day moving average again. So when it's coming down, that might be a good place. If you see here, this might have been a good place to dollar cost average an amount into this stock. This might have been a good place. Likewise, this red candle, that red Heikenaishi candle that you see, would have been a good place to put money in. So you can layer in money every time it's bouncing on the 21-day move average, which it is doing right now. It may go a little bit lower, but the trajectory, as you can see, it's upsloping. So this stock, from my point of view, is likely to do well even in the continuing few weeks and months. Again, does that mean that the stock market is going to continue rising? I don't know, but if it does, then these places would be good places for you to layer in your profits. And when you see that the profits are quite considerable, so 25, 30%, 40% or whatever, then you can try taking that money out and investing it in something else. But this 21-day moving average will tell you that you are in a good, powerful stock that is likely to go up. Second one is Lumentum. Again, same thing. Do you see it here? Bounced, went higher, bounced, went higher, bounced on the 21-day moving average, and look at the price. Okay, it's rocketing upwards. Now it's gone a little bit lower, but it's trying to go above the 21-day again. So this is Lumentum, which I am very bullish on. And if you've watched any of my posts, you'll see I've been talking about this time and again. SanDisk, another one of them. Look at this 21-day blue line. Okay, if you want, you can pause the video, have a look at this, and see what's going on. Bounced here, went up. Bounced on the 21-day, went up. Bounced again on the 21-day, went up. And again, it bounced here recently, so 3 days ago, because this is a daily chart and we're talking about 21 days, so that in 21 days. And then it bounced, and now again it's going up higher. Again, this is telling you that this stock is very, very strong. If you've got money in this stock, it will continue going higher. Again, you could have bought the stock when it was bouncing on the 21-day itself. That would have been an excellent time to layer in, because since then it started moving again. But if you already own it, all you have to do is just stay in this stock as long as it stays above the 21-day moving average. That means your money is going to move very fast. Next one, HUT. Again, same thing. You can see it went through the 21-day moving average, bounced here, and look at what happened. Bounced here, moving upwards. Next one, let's go to Seagate, STX. Again, you can see bounce here, moved up, and now it bounced over the 21-day moving average again, moved up. They're all upsloping, so likely for this trend to continue. So another one, this is AAOI, Applied Optoelectronics. Same thing. So look at how many times it just keeps on bouncing on the 21-day moving average. Bounces, goes up, bounces, goes up, bounces. So it's respecting the 21-day moving average quite a bit. So, and in the past few days, from this high, it's gone down. But again, what is it doing right now? It's bouncing over the 21-day moving average again. So again, this might be a good time to layer in. Again, is that a guarantee? Is that 100% that this is going to happen? Not really. But if you feel that this stock is going to do well, this might be a good time to put in your money, because overall, this is a good, strong stock. As you can see, it's been above the 21-day moving average. Now, HIMX or Himex Technologies, I've talked about this also in my previous videos. Please have a look at this video. If you haven't seen the last couple of videos, you might be interested in investing or buying those stocks. It's far above the 21-day moving average, but it may come down. If it does, then again it might be a good place to invest in this stock. This is a semiconductor stock. Himex Technologies, ticker is HIMX. Look at again, if it stays above the 21-day moving average, it's a good stock to be in. Corning GLW, again, watch my last few videos, or at least last two, 3 videos. I've talked about Corning, and I think again this is one of those stocks that is likely to do well. Again, look at the bounces, goes up again, it bounced here and now is going up. That is telling you that there are lots of people who are happy to buy this stock when it starts bouncing over the 21-day moving average. So quite a strong stock. Credo, again, it's nearing my price target of $211. The ticker for Credo Technology is CRDO. Again, same thing, bounced off the 21-day moving average. In fact, it went quite a bit below it, and then it's rising again. Again, that tells me that there are people interested in this stock because it doesn't let go of the 21-day moving average by much. COHR, again, last couple of videos. If you've not watched the videos, I recommend watching them again. Coherent Corp is the name of this stock itself. Look at the blue line, the 21-day moving average. Bounced here, went up higher. Bounced here, price went up higher. Bounced here, it was sort of bouncing on the 21-day, went down a little bit, then went up, then came down, again touching the 21-day moving average, then went up. Then it went and touched the 21-day moving average again, and then went up, and the price has been rising. So it's moving from the left side of your screen to the right side of your screen. And I always tell you, if you've got a company that is moving from the left bottom to the right upper side of the screen itself, you are in a good stock and is going to make you money. Okay. So this is another one, MXL, Max Linear. Okay. Semiconductors are doing great. Again, it's above the 21-day moving average. In fact, it's quite a bit above. It's catching up to 21-day. If it does, that might be a good time to get into the stock itself. If you bought it when you watched my videos, you are lucky because you can see the profits. The last two that I'm going to show you, because I don't want to bore you, I'm just showing you what's happening. I'm just showing you the strength of the stocks. Revolution Medicine, RVMD, bounced off the 21-day, and it's just continued to stay above the 21-day, and now it's rising. So when it touched here again, 140, that would have been a good price, because right now it's 153 US dollars, and it's rising, and it's likely to go up higher. So again, upsloping averages is telling you there are people who are interested in this stock. Last one, POWI, Power Integrations. Now this stock went down quite a bit from the time I made the video, and look what is happening now. It's bouncing on the 21-day moving average, which is telling me that this stock is still strong because there are people interested in buying this stock. My price target still remains at 100. Whether it's going to get there, definitely, I don't know. But I think in the coming few weeks and months, it's quite likely that you'll be in good profits. And that's why I post and mention price target achieved. You would have noticed these posts again, time and again. I mention price target achieved, because I bring up these targets, and I think that the stock is likely to reach those price targets. And again, what do you do when price target is achieved? Well, that's when you can sell either the whole of the stock itself or 2/3 of the stock and let 1/3 run. Is there a guarantee this is going to happen? Well, I'm like I said, and I keep on saying, I don't know. Okay, by profession, I'm a doctor. I'm not a professional in this field, but I do have a lot of experience in looking at these charts, and I do them on daily basis, and it's been quite a profitable journey, which is why I made this channel in the first place. So I hope you liked what I had to say. If you've got any comments or questions, please leave them in the comments box and I will try and answer them. And I'm going to make another video shortly, maybe in the next couple of days, and I'm going to be talking about quantum stocks because quantum stocks have been going up as well. So hopefully that will be another video that I'm going to make shortly. And also, and as I always say in sort of the last bit of my video, please like and subscribe, and that helps move this video, and so that more and more people can see it. And as always, thanks for watching.